This is episode 188 of the Andrew Hines Real Estate Investing Podcast. Welcome to episode 188 of the Andrew Hines Real Estate Investing Podcast. Today I have Alfonso Quadra on the show, and Alfonso is a very interesting guy. In this episode, he shared a story about how he was on the streets at 15 years old after dropping out of high school, and he eventually went on to build a portfolio of real estate of over 600 units across Canada and the US, and he is now scaling at a higher speed. So in the episode, Alfonso talked about how he uses a general partner, limited partner strategy, which we've talked about a few times on this podcast in the last 20 episodes. And that's a concept for those who are looking to scale. If you're looking to bring in a few more partners and do bigger deals, this is something that I commonly see being done. It's a structure that I'm planning on using myself in my own business, and definitely something worth learning about. So Alfonso's a guy that's been around. I've known of him, seen his face, heard his name for many years, and we finally put this episode together, so it was long overdue, and it was great to have him on the show. Just before we jump into it, I want to remind you that for anyone new to the podcast and new to real estate investing, it's a great idea to go right back to episode 1, because those were very foundational episodes. In the first 20 episodes, tons of great guests and tons of gold nuggets dropped, which will definitely make a difference and have definitely made a difference for a lot of people who've been following this show. Also, before we get into the podcast, if you could take a moment, rate and review this podcast on Apple Podcasts, leave us 5 stars and a comment. And if you're on YouTube, hit the like, subscribe, and notification bell and leave us a comment. Just to help more people find the show. It helps the algorithm push it out there, so I'd appreciate that. Now let's go ahead and jump into episode 188 with Alfonso Quadra. Hello and welcome to the Andrew Hines Real Estate Investing Podcast. I have Alfonso Quadra on the show. And I've heard your name a lot, seen your face quite a bit over the years, but we've never actually crossed paths directly. So thanks for making the trip down.
Hey, Andrew, good to be here. You know, it's like I seen your face too. I'm like, why don't I know this guy more?
Yeah. Well, you're here now. I think Peter Klosko had set this up.
Yes.
And he mentioned that you should be on the show. So if you wouldn't mind, give me the high level view of what you do. I know you're a real estate investor, but tell me the story.
Yeah. So look, I'm a multifamily investor. Primarily, I've done everything in the game. 23 years in the game. Okay. So just like a lot of investors, we've done the SDUs, the RTOs, the flips. But what I really enjoy is multifamily apartment buildings. Yeah. So over the past 23 years, I've been able to build a portfolio across Canada of 600 doors. Okay. And now we're actually set up to grow and scale in a very big way. We're investing not just in Canada, but we're also in the US as well.
Yeah. What areas in the US are you in?
So we're looking at Arizona. We have something actually, I'm so surprised. We found something in Los Angeles, right?
Wow. Wouldn't expect that.
Well, no one expects it, but we have something really nice there, 18 unit apartment building. We're paying premium price, but those are the markets, as you know, it's 10 times bigger than Canada. But It's not like I'm saying goodbye to Canada. Mm-hmm. I'm just erasing that border, that line for people, right?
I'm big on the U.S. right now. I think that it's a great opportunity to diversify, especially a political hedge. You have another whole country that you can be invested in, and
Do you invest in the U.S.?
Yeah, I've got some U.S. investments, and working on the investor visa as well, and just kind of it creates some options and some flexibility. If I want to shift gears and move down there, I can.
Yeah, well, you know what? Like people, they, especially us in Ontario, we look, New Brunswick, we go Timbuktu, Saskatchewan, we're going to Timbuktu, Alberta. But there's also this whole other market south of us that no one's really exploring, right? And, that's exciting. It's a market that's 10 times the size of Canada. You have more inventory. And depending when you go. So we're looking at Arizona, we're looking at Tennessee. I would have loved to been in Texas or Florida, but it looks like we're priced out right now. But
for multifamily,
things are shifting.
There's not as much multifamily in Florida, like Tampa, yes, Miami, yes, not south of that in terms of like the Gulf Coast.
Or the big so we're looking for big portfolios, like
you just want to buy up,
like 300 units. Yeah, that's kind of the things that we're looking at.
Okay. And are you syndicating these, or like how are you structuring them?
Yeah, all of the above, right? So sometimes they're partnerships. Sometimes, when I was starting out in the industry, I was doing a lot of joint ventures, but now we're moving into GPLP structures, syndications.
And how do you go about raising money for those type of things? Obviously, there's a lot of securities challenges with that. Are you getting like an exempt market offering, or are you?
No. Basically, you get that you have the Securities Commission. They're there. They actually have a purpose. And most people tend to be afraid. And there's a governing body that governs trading of securities, and I think they should be. I mean, because there's a lot of cowboys.
Sure.
Right? But at the end of the day, you follow the rules. For us, we just work with accredited investors, friends and family kind of thing. And that's about it. And
so
we don't look for investors. We don't look for investors.
Yeah.
We attract investors.
Yeah. So they're kind of finding you. And I'm imagining you have like a private list that these people are on.
Yeah, exactly.
Yeah.
Exactly.
Okay.
And it's going to take time to build that. A lot of people want to go to that.
Yeah.
I go and I teach a lot in a lot of the trainings that I do, going from a regular investor to the investor. And when you become you enter the category of one.
Right.
Once you enter the category of one, when you're the Andrew Hines, you're not just Andrew Hines, you're the Andrew Hines.
Why I picked that handle.
Well, you enter the category of one, people are coming to you, right? And when you're a realtor, a mortgage broker, a plumber, you will always have to beg for the business.
Right.
When you become this is when people come to you, and then everything opens up.
So how would you structure one of these deals? Have you already closed on one for the States? Or
Yeah. So just GPLP, right?
Okay.
Right now in the U.S., the challenge is there's a lot of people, trying to preserve their capital.
And saving it for when things come down.
Well, we have inflation.
Yeah.
Right? We have the inflation factor.
Yeah.
Stock market's in the toilet. Crypto's in the toilet. And so people are running for real estate. And so you got to be competitive. And so, what we're structuring now is a situation where we can go in and buy these properties cash.
Okay.
Yeah.
So you've got basically the funds on hand ready to go.
Yeah. But that's one of the strategies, right?
Through the GPLP strategy?
Yeah, through the GPLP structure.
Okay, so you're going in cash, you can obviously refinance the money back out after you close.
Exactly. But then you have more time, right?
Yeah.
What happened, everyone's in such a rush, especially when you're living, we're living through inflationary times right now.
Yeah.
And the name of the game is capital preservation, right?
Yeah.
If the money's sitting around, you're losing. I mean, the government said, 8%?
Yeah.
I call BS.
Of course.
Do you believe it's 8%?
More like 20.
More like 20, yeah.
Yeah.
It feels like 50, but more like 20.
I was saying 20 back when it was still a debatable topic, and now you look at the key things you buy. I mean, they're
everything's
pretty well,
doubled.
Yeah,
right.
Gas. Yeah, gas is doubled alone, and that's a huge expense for a lot of people. Rents are up. Yeah. I mean, of course, if real estate was in the basket of goods, that would have, it's what's not in the basket of goods for the consumer price index that skews the result. So the mandate of the government will be to control the inflation that they admit to. So we just have to keep that in mind.
Well, then when people see the interest rates going up, I think July 13th is
the next one.
Judgment Day. I'm not sure if this is going to be airing before that or
this will be after that. So we'll know that.
So actually, no, it just happened.
Yeah, it just happened. Yeah.
July 13th just happened, and they went up 0.775 basis points, and and there's a lot of opportunity. I see opportunity when these things happen.
100%. There's you'll hear the stories more millionaires created in these times than any other, and it's about being positioned to take advantage. And I think it's a great time to have a fund or a private community of investors that are poised and ready to take advantage of opportunities when they come.
The next 5 years, Andrew, will be shown in history.
Yeah.
When we look back in history, the next 5 years will be the biggest wealth transfer in history in the next 5 years. Because if you see what's actually going to happen and what the government really needs, and the only way to fight inflation which they created in the first place with printing all the money they printed, is actually a recession, right? And so a lot of people are scared of the recession, but that actually will create more opportunity than ever in history.
Yeah, because when people are fearful, they're irrational. And we've certainly seen that, right? So in times of that fear and panic, that's when the greatest deals come to be.
I'm ready, baby.
And will they? I mean, who knows? Like there's mixed opinions, especially here in Canada, because we have such limited housing and a housing shortage. Do we see housing prices come down so much here? I think that it's going to be more of a area by area thing. Like there's going to be some areas that do, and then there's going to be others that don't as much.
In terms of real estate, I think you're right? In the housing market, it's going to be somewhat stable. We're going to enter a situation where people can't really afford a house. Things will sit around for a while, but I don't think prices are going to come down. What I do think there's going to be opportunities like portfolios. People, like the baby boomers are now like, unfortunately dying, right? So they're leaving behind portfolios that maybe they didn't transfer the wealth, but they didn't transfer the mindset to a lot of the young people. And they're going to be liquidating 10 cents on a dollar, mixed with a recession and people in scarcity. There's going to be a massive wealth transfer about to happen in the next 5 years. And by the way, no one has a crystal ball, so this is just my opinion. I think it's going to be this lever, up and down lever for a while, where they're just like, we're in the recession now. Let's reduce interest rates. And then it's like, oh no, now we're back. So I think it's going to be like an up and down more than what we've seen, where it's like we've seen inflation rate consistent for like over 20 years at 3%.
Again, that they admitted to.
Exactly.
I don't really believe we ever had real economic growth after 2008. I think because the inflation adjusted rate would have shown that it wasn't actually real economic growth. They printed
money again.
They printed money back in 2008, and it took a while for the full impacts to be felt of what happened then. And now, of course, even more so. But I think that the competing forces, again, they're going to make it really tough to know where things shake out. Because traditionally, we have what you would call stagflation, right? It's undebatable. You can deduce that we're going to be in a recession once we have the two quarters of negative growth. So normally what they would want to do is lower interest rates to get things going. But when you have a recession paired with inflation, that's stagflation. And now, yes, like you said, lever on, lever off. What do we do?
Well, the thing is, the answer for the longest time has been kick the can down the road.
Yes, until you can't.
Well, I mean, someone's at some point. It's like a Ponzi scheme. It's like at some point the jig is up.
Well, and that's the big thing. Like people have been talking about the quantitative easing, and it's just sheer market manipulation, like buying bonds, selling bonds, manipulating the price at a government level. Rather than letting the free market shake out, because if they were to let the free market shake out, then that might prevent a certain politician from getting reelected. That's why they want to kick it down, right?
They're just like, okay, let's just stabilize it, keep it moving, print money, print more money, print more money.
Don't want it happening on our watch.
Someone will pay in the future. It won't be us.
I heard a quote, or I read a quote the other day, like a politician's first job is to get elected, their second job is to get reelected. And everything else, third job comes far behind those two.
Well, you know what? At the end of the day, and as you know, we're professionals. We're professional real estate investors. So very much like the NHL, every year they change the rules. Right? And professional hockey players show up and play the game within the new rules. The same wind blows on us all.
We got to do it all. I mean, there's never an excuse. Like you can look at the macro and say, oh, well, that's hard, or it's going to hurt so many people. And yes, that can be true. But at the micro level, we're all in control of our actions, and we can all create our own.
And there's
future.
always opportunity everywhere.
In every circumstance.
We're buying we're buying during recoveries, expansions, or stabilizing declines. We're buying. Like we're investors.
So
like, are you an investor, or are you like a flipper, right? Like, are you? If the only way you're going to make money in real estate is if that piece of real estate is going to go up in value, you're not truly an investor. You're just a speculator.
Speculator, absolutely. Yeah, and that's the on the Bitcoin side of things, why I always had trouble with that, because you have to be kind of banking on the value of it going up. With real estate,
and it doesn't have income.
It doesn't have income, right? With real estate, you got the income, right? I mean, so there's a lot of people who made a ton of money in, like, say, Bitcoin, but you had to speculate on what other people thought it was worth and how many other people were going to go buy it to drive your price up.
And you know what? Like, we're still in the best country in the world. You know, I grew up in Latin America, in war-torn El Salvador, and then we had to move to another country, and a communist country, Nicaragua. And, you know, at one point, you couldn't even buy food, right? Yeah. And there is no opportunity, zero, right? And so, you know, when you come here, you see all of the opportunities around you, and like a lot of people just, you know, they just go, they take it for granted.
That's true. Yeah. There's still so many ways to be successful here in Canada.
The banking system, it's beautiful. They lend you money on real estate.
That is nice. Yeah, the leverage, right? Like,
they're not going to be letting you money to buy crypto.
No. I think that the biggest thing with real estate, that was one of the most attractive features, is that you can leverage it at 80%, 75%.
The government, that means that the banking system, they're telling you how much
confident
faith
they are,
and how confident they have over real estate versus
over everything else.
Because
they don't treat stocks the same way. They will still lend on stocks, but only in certain circumstances, not nearly as commonly.
Yeah, you can short a stock or whatnot.
Yeah. Or infinite banking, you can borrow against your.
No, that's, I mean,
different concepts.
Yeah, different concepts. But at the end of the day, real estate it's true. It's been proven. And for me, especially, you know, in the multifamily space, you know, in the apartment building space, what really attracted me, Andrew, was the economy of scale. Yeah. This idea that people will always have to live somewhere as long as you have, like, we focus more on affordable living, you know, not you know, low income, but like, you know, in the middle, right? And what happened was, you know, some of the decisions that we've made, we've always made them with that in mind, that Armageddon-proof type business, you know? And so we have doors all across Canada. And when 2020 came, right, everyone was scared. March 2020, like April 1st, Andrew, was Judgment Day for all investors. If you remember, it was like
people were scared.
Yeah, we didn't know if people were going to pay their rent.
That was.
But if you remember, the government gave them just enough to, you know, pay their lodging, buy their food. The government didn't pay, you know, people to live in their luxury condo downtown Toronto. You know what I mean? At $3,500 or $4,500 a month, they gave you $2,400 a month and make do. Yeah. And so what happened? Well, by the time April 1st came, and of course we took massive action at that time, we were 98% collected. Yeah. Right. And then I have people in the space, good friends of mine, you know, with luxury properties, shiny stuff, beautiful stuff. When you look at the stuff, it's like gorgeous. Yeah. But they all suffered during those times. Yeah. They did well during the good times, but during the bad times, you know, people are not looking for luxury, right? They're not looking for those extras. They're looking for just basic, I want to live here. This is my rent. And we were able to come out of it really in a positive way.
Well, that's great to hear. And I agree with you on finding stuff that's recession proof. I'm always thinking that, you know, people would ask me, like, what do we do? Like, knowing what's coming, because I was kind of calling this out and predicting this back, you know, a year ago, especially the inflationary problem. You know, what do I invest in? What will people always need? That's housing. The question to ask.
They will always need to live somewhere.
Yeah, somewhere. Right? They'll always need food. They'll always need
Look at the grocery stores.
Energy.
They made a killing.
Yeah, grocery stores do well. Yeah, so I mean, if you're thinking about things like that, I mean, like, sure, for currency, like gold and silver can be nice, but I mean, if you're hungry, you need a sandwich, not a piece of gold or silver, right? So,
and also it costs money to store. Yeah. Right. So the storing fees of gold and silver. Yeah. Sometimes when I think about it, like this, not only does it not provide income, it's just a place to hold the wealth. It's just
insurance. Yeah. And it's an expensive insurance in a way, because like you said, you got to store it. You got to worry about where you're going to put that. Of course, I do like it. I think it's got its place, but it is, you know, it is a challenge.
This is what I know. The economy of scale of an apartment building, all the different profit centers in real estate, you know, at the end of the day, I can't picture myself, you know, getting into any other asset class other than where I'm at right now, you know?
Oh yeah, for sure. And I want to run through like kind of an example of what you look for. What maybe we take a recent one that you've bought and kind of work through the numbers on that.
My strategy has changed over the past 23 years. So when I started, I was a value add guy. Okay. I was like, go in there, roll up my sleeves and turn a property around and just be really, really aggressive, right? 23 years in the game, I've been able to create a really solid portfolio where I was able to take 20% of my portfolio and sell it off in the height of all heights, which has been the past, year, and created a liquidity event. So now I'm moving more towards newer, cleaner, lean and clean, right? Brand new assets, developments, building. And so that's kind of the space that I'm playing in right now. Right here in Ontario, especially with the rent control, there's incentives for new builds. For example, they don't follow the same rent control
absolutely.
rules.
Yeah.
So they're kind of inflation proof in a way, because if you get hit with inflation where rents are going up, you kind of have that flexibility. Now you are paying a premium, right? You're going to pay a premium. So like, for example, one deal that I just did, which is a 16 unit apartment building at 4.65, right? So we're paying a premium per door, when my average per door historically in my portfolio is about $100,000 a door. Yeah. Right. So I was looking. So back in 2016, 2017, I was going in secondary markets paying like $60,000 to $70,000 a door, and that was kind of my MO. Adding value to the property. In this case, 16. What's the cost per door? We're like close to 3, right? So
somewhere in that ballpark.
4.65 million, 16 units, brand new. You got an elevator.
You'll just keep the whole building.
It's beautiful. It's clean. It's got a parkade. This one I'm doing now, 60 units, 14.5 million, right?
New builds.
New builds.
And are you buying at like land entitlement stage? Or
so I'm directly from the builder. So I'm doing both.
Oh, so you're having a builder just build it up.
Right. So right now I have one in a major market that I'm doing a 30 unit. That we're building. Right. So I'm involved with the building. Now I'm not a builder. I partnered up with the builder to go. We went through the bringing that lot to site plan approval. 30 units, parkade. In a major market after we're done. So with soft costs, value of the land, construction costs, we're into it for about 10.4 million, and then we'll get a after construction value of about 14 and change, and so we'll be able to refi that building and pull out 80% of the.
How many units will that be?
30.
30. Okay.
Yeah. So then we're doing so that was that was after actually buying a few from the builder. Yeah. Why I like that? I know I'm paying a premium. Yeah. But it's for me, it's the least complicated. It's a path of least resistance, because I have my set price. The builder has to actually fill the units for me. So they have to lease it up and they have to lease it up at the number that we've talked about to get the value that we've talked about.
Well, at 30 units at 14 million is 466,000. So these must be some nice units.
Oh yeah, those one that one is, but the 60 units at 14.5, what is 230 something a door?
So you said the 60 at
60 at 14.5 million.
Okay, yeah, then you'd be closer to that, yeah. 60 at 14.
I think it's about 233 a door or something.
241, yeah.
241 a door. Yeah. So there is a benefit to new. In 20 years from now, it will still be new. Yeah. My insurance loves it.
Yeah.
Right? Because right now, with the replacement cost of buildings, insurance companies are scared, right? They're scared to insure something that it was built in the 1940s or 1950s. That's where I used to play. That's where I started, buying, properties that were built in the 60s, 70s, and, where I could see the opportunity. And, now we're into like brand new. In 20 years from now, it's going to be new. For the first, year, it comes with fully warranty. Everything comes, the roof has a warranty. The windows have warranties. The appliances have warranties. It's just like this beautiful honeymoon phase that I'm enjoying right now. And, the investors love it. It's brand new. It's a shiny, it's nice. It's a shiny thing that they could, it's bragging rights,
And where, with these type of properties, are you expecting to cash flow right off the bat?
So the value adds, which I still do the occasional value add, right? So I'm not completely away, but I'm not going to go into like something that's so intensive, right? Where you got to like really turn around all of the units or whatever.
So you might just turn them around.
I'm an old man, Andrew. I'm 45.
That's still young.
I paid my dues. I've been doing this for 23 years. I've been fighting with the crystal meth heads and the crack heads and and all of these people. Nothing wrong with those people. Nothing wrong with those people. But you know what? I pay my dues. Sword fights, all kind. If I shared all the stories with you. I got scars, Andrew. I got scars.
That's wild.
But now I'm going for lean and clean. And so, yes, you're right. Little light on the cash flow, right?
Yeah.
But you know what? I'm looking for a different type of clientele. All the people that are investing in a lot of my deals, they're accredited investors. Mm-hmm. They understand the stock market. It's what it is.
Yeah,
you know what I mean. And it's good and it's not good. Like, how do you even sleep at night? We're living through a time where someone with a tweet can impact that line. So a lot of the people, they're done with that. They're done with crypto, and they're looking for capital preservation. Right. Yeah. Get into a good asset that is going to perform. And if our cash on cash is like 3%. A true 3%. So we're not like playing with numbers here. Like this is like 3 or 4% cash on cash. Better than losing 16% or 20% if the money's sitting in the bank account. And so that's kind of a bit of the shift that I've made in my career versus all the value add stuff that I was doing before.
Yeah, it's a little bit more hands off too. If you can just partner with a builder. Is the builder an equity partner?
Well, in one of my the one that I'm doing from we're going through the whole process. That builder is an equity partner. Okay. Everything else I'm buying directly from the builder.
From them, yeah.
So I have a 24. I have a 24 unit coming up. I have a 44 unit brand new coming up.
How do you just have a builder that has that, or are these developers that were developing it anyway, and you're just taking the whole thing?
Yeah. I love to make connections, relationships, connect with people that are in the space, that are doing real estate, they're building, and people say, well, why would builders sell this? Well, they're builders. They're not investors, right? They want to get in, get out, go to the next thing. Get in, get out, go to the next thing. And there's obviously incentives that were created in the past, 4 years in Ontario that allow builders to make money building apartment buildings versus before. The reason why we're in this situation in the first place is because there was no incentives for people to build. So that's all they did is build condos.
Right.
Once the government puts it in the hands of the entrepreneurs, they will solve this vacancy crisis, right? Yeah, make it so we can make money, right?
Right. Yeah.
Give the incentives. You'll see if you give enough incentives, people will build. You'll see, and then you'll create jobs. I mean, there's benefit.
What are some of the incentives that you like right now?
Tax incentives.
Okay.
So you can apply for a tax. I'm trying to remember the name of it. I know it's not going to hit me right now, but for example, we're in this secondary market, and for the first year we have tax break. Right, so property tax break.
I've heard of this. Welland does something like that as well.
Yeah. So we have a property tax break. So the first year, I think it's there is no tax. There's no property tax. The second year, and I have to check with my admin how exactly it works. But those tax, I mean, the one thing that really takes the cash flow out of a deal is the taxes.
Yeah.
And
so just get rid of those.
Yeah, just get rid of them, or make it so it's not as harsh, so people can build. And so there's tax incentives, the rent control. That in itself is the reason why you want to go into new builds.
Yeah. Then you can just set the price to whatever you want. It used to be 1993, and then wasn't it Doug Ford, or it was right before Doug Ford took office in Ontario that it got updated to 2018, I believe.
I'm not sure if it was Doug. I think Doug.
It was right before Doug, but he didn't undo it.
Okay, good.
That's my understanding of it.
Yeah, I'm not a political guy, so I don't believe in one party. I believe in efficiency.
Yeah.
So make it easy for me to make money, and we will help the economy. We will create jobs, and we will build. We won't have a vacancy crisis.
No, absolutely. If the government just got out of the way, all these problems would be wrong or gone. We'd be in a good spot. But,
it's been proven.
Yeah, let the free market. Yeah. Because people who have an entrepreneurial mindset, and if they're taught that, you go out and you solve people's problems. Yeah. That's what an entrepreneur does. Yeah. Go solve people's problems and you make money for doing it.
Rent control, it's actually hurting the people that you're trying to protect.
Absolutely, it does, because now the landlord needs to charge more to all the other tenants to make up for the fact that he's making less off of the ones that are staying and won't leave.
Also, with the landlord-tenant rules, you're trying to protect tenants. You're actually hurting them, in my opinion, right?
I agree with you.
I'm just a investor here, but there's some people that you're like, you know what? I would love to take a chance on this person. I know the credit wasn't right. Something happened in their life.
Yeah.
And I would love to take a chance, but I can't.
I can't risk it. Can't risk putting them in my unit because once they're in, I can't get rid of them.
That's it.
Exactly. And
the risk is too high, Andrew. Yeah. And so what am I going to do? Right? The only thing I can do is like, okay, I'm sorry. I wish. And so what happens is a lot of these people are not going to get places anywhere. And this is where you have tent cities. We live in Canada, the most prosperous country in the world, one of them. And we have tent cities. When we have all of this land, it doesn't make sense. And so, and I know where the heart is. They want to protect tenants. Yeah. And I'm not a politician, so I'm sure that I'm only speaking from one aspect. But maybe there's other aspects that I'm not looking into.
Yeah, getting elected and getting reelected; those are the other aspects.
Exactly. So those kind of things that in the market that that led me to new. Yeah. I love new, and I'm in a position now that I've been doing this for 23 years. I've built a reputation. I've proven myself. And I paid my dues.
Yeah. So with these ones here, same type of thing, GPLP structure or syndication?
Sometimes they're just simple partnerships, right? Sometimes they're just, get a few of our, some of these deals are not that much. They're not that capital intensive. Yeah. But the bigger stuff, yes. If I'm looking at 100 unit, if I'm looking to take something down that's serious, or we're doing stuff in the US, GPLP, for sure.
Yeah. Now with the US stuff, if you're doing those, I've heard people say it's not, Quentin D'Souza came on and he said, it's not as profitable for me to do it in the States. He's like, because up here in Canada, I could do 50-50 with no money in all the time. Whereas down there, it's harder to do that. Has that been your experience?
I would have to agree, right? But the thing is, I'm not looking for US investors. All my investors are Canadian.
So that it still works.
Yeah, but and then the other thing is, Canadian investors there's such lack in inventory in Canada that they're looking for other options.
Yeah, how can I get this money performing better? Yeah. And what do you find that what's the carrot that you need to dangle that makes sense? I mean, if whatever you feel comfortable sharing.
You know what? everyone has different reasons.
Mm-hmm.
We are living through different times. So
Yeah.
it's really what's happening in the market, before, and people are like, what about your value add stuff? People love my value add stuff, and it's not like it's going away.
Right.
It's just you're finding less and less of it. Right.
Yeah.
And I had to retrain my investors. I'm like, guys, if you're just waiting for value add,
Yeah.
like we're not going to do deals, because it's not like I'm not going to jeopardize my 20 plus years in the game and investors' money just to get into something that may not make sense, right?
Yeah.
And so when I come with my numbers, when I show up, people are like, okay, they trust the numbers because they're all very conservative. And if I could do value add, we'll do it, right?
Yeah.
But it's not always the case. And so, I'll get people. Just the other day, someone was like, "I'm not getting your emails anymore. I don't have anything for you. You wanted value add. I think we're going into a buy and hold stage where we just need to preserve the capital, and there's going to be opportunities for value add. Like when the cap rates start going up, and you start to see a lot of these mom and pop operations, baby boomers. There's going to be a lot of inventory on the market. This will be a massive opportunity for the value add, right?
And that's actually something I really I'm planning on putting together, is like a list of people who want to take advantage of that. Like when this comes up, let's have our plan in place ahead of time.
Well, let's do it.
Yeah.
Because let's call it the baby boomer trust.
Yeah.
Let's create a fund where we're just going out buying all baby boomers assets. And
it's happening. It's it's all over the place right now. People trying, just looking. They're like in their 80s now. They're like, what, I'm done. Yeah. I don't need to keep this anymore.
And so those are opportunities, and they will come. Before, that's all there was. There was so many, like back in 2016, 2017. The value adds were there everywhere, right? And now they're there, but they're
overpriced.
They're not
a lot of the time.
They're not. It's not like, oh my God, this is like a perfect BRRRR, And so, that's what a lot of investors are looking for. But you have to think about one thing: the longer the money sits in your account, or in other underperforming investments, the more you're losing every single time. Yeah. And so, you know what? Look for someone that you can work with that is conservative, that sees the long term, that has a long-term goal, and stick with those people.
And what are your investors expecting? Like, are they expecting to be in for 10 years, 5 years? Like, what is the general idea? Or is it, we're buying it, we're keeping it?
So with the new stuff, it's plain and simple, like, we're keeping this.
So what if they wanted to sell their units or their shares in it?
Yeah, we have like, obviously, if someone wants to, exit, get bought out, there's no problem. We could do that.
You do like a current valuation?
Yeah. That's
how do you come up with a current valuation?
Appraisal.
Like you'll just get an appraisal. Okay, so they just have to pay for the appraisal kind of thing.
We actually, if someone really wants, like, if they're not in agreement with what the offer would be, we'd get 2 appraisals, and we'll get, like,
okay.
Take the best of 2, kind of thing.
And how many people, like, give me an example of where you might have like 3 to 5. Would you have 3 to 5 people in a deal, or would it be more like 10 to 50?
It really depends. Like, there's some deals that it attracts people that are really accredited. They have have the capital, and I might be able to do it with like 4 people. Yeah, those are my favorite.
Yeah, right? it's less people to manage.
I want to work with like high net worth accredited investors that are looking to buy really amazing assets that are going to outperform everything over time.
And those are also going to be the people who don't really care too much about the cash flow. So you have the opportunity.
Now there is cash flow,
right?
And it's going to improve over time. Yeah. But when you're getting into a new build, and this has been my experience, you're into something where in 20 years from now, it will still be new. Right? Versus, buying something in the 70s or 60s, which what I was doing before. but then the roof comes up.
Yeah, you still get your life cycle maintenance, but I guess you're saying your roof is still good after 20 years if it was done right.
Well, I mean, you have there's time, but if you're buying something that's in the 70s, you're
probably on your third round of life cycle maintenance with the elevators, with even more.
So that there's benefits, and sometimes the projected cash flow on an older product ends up being the same lower cash flow because of all the maintenance that takes place.
I always I'm a stickler on this podcast when we run numbers. I'm like, well, you're forgetting about life cycle maintenance. Our maintenance is nothing, but like, let's picture, roof comes up, there's 10 grand.
Unexpected.
We got to amortize that. We got to plan on that. The furnace goes, okay, where's your budget for that stuff?
So what I love about the new, it's like the honeymoon. You get this honeymoon period.
You're not really needing to do any of that stuff you're going to start thinking life cycle maybe after 10 years for like minor stuff, and then the big items probably not for 25. So
now the projected becomes more of a true cash flow.
Yeah, it's true. But like to my point, these accredited high net worth investors, a lot of them don't really need that cash flow. They want to see their nest egg grow.
Yes.
I think the thing that you would probably want to avoid is cash calls.
And for sure. Right. I mean, and then you with you're definitely avoiding that.
There shouldn't be, right? Unless there's an insurance thing, but I mean, then you call insurance. Like those are your cash calls. Defects on build, you hopefully get the warranty covering it.
And I have a lot of videos. I do a lot of training on this with a lot of my students, where we talk about new builds. You have to vet the builder.
Because Terrion's not going to cover you with rental product, but the builder can still honor a warranty.
And so you want to make sure that you know the builder, you've vetted what they've done, go and look at what they've built before. Fortunately, with this builder that I'm currently working with right now, I was able to see 4 other apartment buildings that were built that someone else bought, and I was able to walk through them, see if how fast they were to act, during warranty calls, or how fast did they react? Did they come to the property right away?
Right.
So I was able to do all my due diligence, and that's what I suggest. If someone's going to go down this road, make sure you vet the builder. Make sure it's not their first time kind of thing, which is nothing wrong. Maybe there's some good builder, but if there's their first time, then we have to look at the property, get a property, do our proper inspections or whatnot.
Yeah, it definitely helps if you can see that track record and know that they have a reputation that they want to maintain. And of course, you're getting into like larger stuff where I think that they'd probably want you as a repeat customer too.
Oh, for sure.
They know, hey, if I do a good job, he'll buy a couple more from me. That's repeat business.
Another thing that I love is that you get to see the whole process, right?
Yeah.
You get to see them pour the foundation. You get to see them, you frame it. You get to see the inside. You get to see them. You get to see the whole process from scratch. From like digging, right? And so a lot of the deals that I have, I have them under contract before even the shovel hits the ground.
So you're just buying the land.
No, I'm basically, so there is times where I buy the land and we build, but the last couple of deals, the deals that I'm talking about, is me buying directly from a builder.
/ developer. So they've already got the land.
They did it all. They have it. And they're like, I have this deal coming up. These are going to be the numbers. This is going to be the price. And I'm in.
Walk me through a deal like that. So say you might have 4 people that are going to invest in that deal. How would you structure it? At what point are you getting their initial investment?
So a lot of my deals, it depends on the deal structure. If I can make my life easier, I will take less equity. It might be like a 40-60 kind of thing.
So you'll take 40 potentially, 60% split among say 3 or 4 investors.
Yeah, exactly. And there, you don't need to be greedy. You know what I mean? Like if your life is easier, if you don't have to go try to do a syndication, it makes things cleaner, easier.
Absolutely,
I do take an acquisition fee. Anywhere between 1 and 1.5%, depending on the deal. We're still going to do on a brand new build. We're still going to we'll still do an inspection. We're still going to do all our due diligence.
And are you paying, like, what kind of deposit structure you have once it gets rolling?
Yeah, so the deposit that I'm looking from the investors, you mean?
No, what do you have to give to the builder?
Okay, so I built a relationship, right?
Yeah.
So, before I was giving like 300,000-400,000, but now we're down to like 20K.
On a total value of what?
Of like, let's say 10 million, 14 million.
So 10 million, which you're not paying until it's done and ready to go?
Yeah.
With a 20K deposit?
Well, the thing is, there's trust. Right?
Yeah. So your developer's getting the financing. He shows the bank that he's got a purchaser.
Or the developers already has the money to build.
Yeah.
The developer's already raising the cap, doing his raise to build.
Oh yeah, they're probably raised bank construction financing.
Yeah, exactly.
Because they have a buyer, you. So they can finance it. They build the cost of that into the deal. You have a set price, like some of the examples you gave me.
Yeah.
Maybe even 460,000 at a door.
Yeah.
Which, I mean, if you compare to condo pricing, that's not that much.
No, not that.
Yeah.
Not that bad. At the end of the day, you have to do the math.
Yeah.
Right? You have to see where you're like. You gotta.
Yeah.
You gotta see where the costs are gonna be. You obviously have your income. You have your expenses.
Yeah.
You're gonna have your debt service.
Yeah.
And then you have cash flow.
Yeah.
It either works or it doesn't.
Right, and you're going to make sure it works, obviously. Now, at what point are your investors contributing their first bit of money? Like, because
I like speed. Like, I'd rather have people set up right from the beginning.
Yeah.
I've been doing this for 23 years.
Mm-hmm.
This industry is small. I mean, we just met.
Yeah.
But we know each other.
Yeah.
Right. And like the second you mess around here in this industry, everyone will know.
People find out. Yeah.
People will find out. And so I've been someone that I've always treated people with respect, and people know the types of deals that I bring to the table.
Yeah.
And I attract a certain type of investor that, when they're in, they're in. And so what we, if it's a simple deal, we could do a simple corporate structure, and if a lot of the times a lot of these people are become friends, really good friends of mine. And so it's like, look, we're going to take this down. There's other times where I may have to do a raise, and then I got to get my lawyer to create the GPLP. We have a memorandum of understanding. We want to make sure that they're accredited. They come in on the LP side, then they sign a subscription agreement, and so many different ways that I'm doing things.
Yeah.
My favorite is just dealing with a couple people. Hey guys, everyone's gonna kick in 500K, and let's just get this done.
Yeah. So in that regard, though, so you're talking to a developer builder who's going to sell you a product. It's going to take him 1 to 2 years to build it. Yeah. So 2 years. So you're lining people up saying, I don't need anything from you until the 2-year mark when we're going to buy it. Is that kind of how that goes?
I want to have their commitment.
You have their commitment, right? So you already have their commitment.
Yeah.
They've signed on the dotted line. Yeah. So in their head, they've committed, but they haven't actually fronted the money yet. Is that kind of how that works?
They'll front some of it.
Some, like a deposit.
Yeah,
against,
exactly. Yeah. And then, like the people that I deal with, if we've been working for a long time, I know that people know that we're serious.
Yeah.
This is the same way that the builder that I work with, they can let me control 14.5 million with 20K because we're serious. Like we just bought all of these other. Yeah, we just bought all of these other, everything that you had. So it's like, of course, you're gonna be you're not gonna be as aggressive with someone that is completely new, which is another benefit of becoming the.
Yeah.
You see, when you're an investor, you got to fight for everything. Right?
So,
who are you? But once you become the Andrew Hines, then people start working with you in a very different way.
Yeah, and I just had this conversation with Jazz Takar, who was just on, and we were just talking about how, people would take my call. Like I like you said, we're in a small community, and people know, and it opens up doors, kind of being known, right? Yes. Becoming the, as you say, right? Well,
your job after getting known should be getting more known.
Getting more known, more trusted, more liked. Yeah.
And then because even if you become known, you can easily become forgotten.
Right. You got to keep ramping it up.
So you got to keep getting known. How long have you been doing your show for?
Just over 3 years.
3 years. After the first year, it should be good. Everybody knows you.
Yeah.
But if you would have just took a hiatus for a year, no one would know you. Nobody would even care. right? You'd have to start over.
Yeah, it's done some interesting things. Like I could have been pushing it a lot harder, a lot faster, but in the last year we've hit like levels of downloads and consumption that I never thought we'd get to.
You're like the Joe Rogan of real estate podcasts.
Yeah, and we're really trying to do it with this setup here.
I love it.
Yeah.
You know what? There's nothing better than live. Like the Zoom podcasts are great.
Yeah.
But like, look at this environment. We could be here. I noticed you didn't have cigars and
yeah, we don't have any scotch or bourbon, but that is definitely something that would be fun to kind of get to. I try and keep it to an hour, so I don't do the 3-hour Joe Rogan style, but definitely something that would be fun to do.
And so, what made you start?
It was a couple of things. Like I always would talk about these things with people. And it kind of gave me an opportunity to like network with people who are like-minded, build a community in my local area, because I was investing in London. I didn't know anybody up this way. So it really gave me an opportunity to go from zero to I have like a ton of close connections right in this area, in the GTA. And then again, I went off of Kevin O'Leary's statement. He said, "Why am I on TV?" Because nobody anywhere wouldn't take my call. If I called, they'd take my call.
Exactly.
I'm like, well, that'd be ideal, right? So, and then plus my mother-in-law's got her TV show, and I dabbled in TV a little bit, and I saw the power of having a following, and I'm like, okay, I got to do it, but I'm not going to pay hundreds of thousands of dollars to have my own TV show. I'll do it, grassroots kind of thing.
Well, when there's something that happens when you enter the status, right? And so, because I've been in this game for 23 years, and then someone on a podcast, they're like, "Oh, you're the godfather of real estate," and then someone used it again, and then they used it again, and then all of a sudden I became the godfather of real estate, and I was like, you know what, I like that, but there's something special that happens to your business when you enter the status, right? You enter the category of one, and people are like, that's the godfather of real estate,
Yeah, absolutely. Well, tell me about the team, like who's behind the scenes for you, because obviously you can't do it all yourself. You're down here talking to me, not, making phone calls and signing contracts.
Team is important. Without team, you have nothing. The gap, and I always say this to people in a lot of my training, speaking, presentations, it's very clear. From where you are today to where you want to go, or whatever your goals are, the gap is always people, every single time.
Okay, yeah,
right?
That makes sense.
And so you need to leverage people. You need to bring in people that are smarter than you. Yeah. Shout out to Ed Hervies, because he's our operations guy in our education company, Wealth Genius. My wife, she does all the operations for all the doors, the 600 doors.
Oh, yeah.
And we have an amazing admin person. We have an acquisitions person. We have bookkeepers. We have on-site supers. There's all of these people that make this happen, and no one can do it by themselves.
Exactly. Yeah.
And it's really about finding the people that play at the things that you have to work hard at. I will never be good at paperwork.
I like that. That's good.
I will never be good at paperwork. Like, you put paper in front of me, you cripple me.
Yeah.
I lose it's like kryptonite. It's like I get all weak. And I'm like, no, don't give me any more paper. Right? Like I'm not that person. Put me in front of people, everyone's signing checks. Yeah. Right? And they'll love it. Right? And so there's a really powerful book. It's called Rocket Fuel, and I don't know if you've read it.
I haven't. No, that's
so. If your audience is, they have Audible, you can get it on Audible. You can find it on Amazon. But it really talks about the visionary and the integrator. Yeah. Now I'm a visionary. Yeah. And I'm a big picture person, right?
Yeah, very much.
But nothing will happen without the integrators. Nothing. It just becomes a lot of fun and big ideas, but there's no follow through, right?
Yeah, I feel so. I can definitely do some of the books and all that stuff, and the integration part. But I feel like for me, that's like you said, paperwork. I don't even like sitting in front of my computer. I'll sit here at this desk. I want to be outside. If it's sunny outside, I kind of want to be out there as long as it's not as hot as it was yesterday. You know, I want to meet people, talk to people. This is great.
Put me in front of people.
Yeah.
And whatever you want, we'll get it. Like whatever it is that you're looking for. And so the idea is with Rocket Fuel is like, it's like love languages for entrepreneurs, because you now understand what the visionary's role is. Yeah. And if everyone on the team can understand what the visionary's role is, and what the integrators and the visionaries also need to understand the integrators. Yeah. Then you can build the Fortune 500 company. Yeah. Right? If everybody understands their role and everyone's there and engaged in activities.
Rocket Fuel is the name.
Yeah.
Huh?
Rocket
Okay.
Fuel. Pretty interesting.
Yeah, I'm gonna have to grab that one. I had this thing. I was doing a lot of podcasts, so my Audible account, my credits were like maxed out. So I just bought a whole bunch of random books. I wish maybe I bought that one. I'll have to double check.
Yeah, well, it's a good one. It's a good one. But team is important. Yeah. Bottom line, no one can do it alone. Yeah. Right. And if I was doing it alone, the second you start working in the business, you're not working on the business. You'll never grow. And you end up being mom and pop. You can't scale the business.
Can't scale. And you'll drive yourself nuts. Like, unless you just love it. Like, I love working with my hands. Never get to. Yeah. But, you know, with a lot of the stuff in the business, when I find myself doing it, like we just bought a campsite, Airbnb, like glamping thing. And I have a few partners on it. And we all agreed, delegate everything. There is nothing that we do. Like, we don't do anything other than delegate. Yeah. And, you know, we came up with the idea, the concepts, but we can't be doing this, X, Y, and Z. That has to be our mandate. Otherwise, we'll lose our minds.
Well, thank God I was, I have no skills in any renovations. I mean, like, if you see my hands, I don't know. Yeah. The people at home can't see it. Yeah. But if you see, I don't have any calluses on my hands. Like, my hands, I actually have to report to the museum very soon, because they want to showcase my hands, how soft they are, you know. But at the end of the day, it's not for me. Right. Yeah. But I do appreciate the people that can work with their hands. You know, I do appreciate those people.
It's just not the highest paid skill. Yeah. Although I will say, trades make a ton. Trades are doing well. I mean, compared to the other white collar jobs. Yeah. But I mean, being
take care of your trades.
Yeah, being the one who creates the idea, the visionary gets paid the most in salespeople. Yeah, the visionary who can sell.
Get people to sign checks.
Yeah, get people to sign checks. That's the big one, right? And it's not hard to, you know, you're enthusiastic, you've got the brand, you know, the awareness, and those things all come together, help really big.
You don't want me there with a hammer. Actually, you want to get hammers out of my hands.
Yeah, man, time has flown by on this one. Yeah.
Andrew, you're a really good interviewer. I have to tell you, I'm having a good time here.
Yeah. Thank you.
You know, like you've obviously mastered this craft, which is podcasting. You know,
the craft of just saying whatever comes into my head.
Yeah, well, it's good. You know what? At the end of the day, it's not easy. Yeah. Right. I was telling you, I was on live television for many years, and you know, for the most part, it's easy until you get that one person that just gives you the one
word answers.
One word answers. Yeah. That's good. Yeah.
It's, you know, fortunately, I haven't had too much of that. Yeah. Most of who I've had on the podcast has been, I was aware of them and wanted them to come on. I do occasionally say yes to somebody who asks me to be on, but I usually get way too many of those offers to even read. Yes, so it's just like, okay, well, I can't. Yeah. But been very fortunate on that front. I would say the closest to it, and it's funny because Matt Fichet is like, yeah, everyone who interviews me, like we're done so fast, they're so surprised. But I managed to get an over an hour interview out of them. So
nice. No, you know what? You do a good job. Like, did you picture yourself here doing this? What you're doing ever? Like,
no, probably not. But I used to teach at Western, and that gave me the confidence to know I could maintain attention of a room. My dad was a high school teacher, so I knew he could tell stories, and he kept people engaged. I didn't think I got any of that from him, but then when I taught, it was like I went through extreme nervousness, but then once I just kind of let go of all my insecurities, I was just cool to just stand there and talk about what I knew.
Were you insecure?
Yeah. I definitely was, when I started. Me too. Yeah, I did really badly on my first teacher evaluations. It was like the summer intersession, and I was like the first of 3 teachers who was being trained. So I'm like, first up, still 21 years old, and teaching a class. I had like 40 some odd year old lady in the class. I'm like, how am I teaching this lady? So I was really nervous, and it wasn't until like the second week where I hit my stride. But it was only a 2-week intercession for my teaching. So when I did that, it didn't go well. But I took that, and I'm like, I just need. Hey, I've hit rock bottom. It wasn't really rock bottom, but for me, it was a real gut punch. Didn't go well, and I'm like, I can only improve from here, and that was that.
What about high school?
I liked debating. But I never did like much about high school other than when I got to debate.
Look, high school was extremely had low confidence, confidence, insecure. A little bit about my story is, I dropped out of high school at 15, ended up leaving home at 15, living on the streets, and I was like down and out. And if someone would have tapped me on the shoulder and said, Alfonso, like one day you'll be this person that everyone wants to listen to and on stages and on podcasts, I would say, no, you're lying to me. But the truth is, anybody can transform. Anybody that has low confidence, if someone's an investor right now and they're like, man, geez, like these guys, it's the Andrew Hines and you got the godfather of real estate. It's easy for those guys to raise capital or be in real estate. Anybody can develop the skills to get up in front of a group of people and share their story and present, A mentor told me a very long time ago that the most powerful and the most valuable piece of real estate is not the buildings, it's actually the stage.
Yeah.
From stage, people have changed minds. From stage, people have created wars. From stage, people have stopped wars and inspired nations. Like, Martin Luther King, I have a dream.
Yeah.
And so once you can control the stage, once you learn how, and it's a learnable skill, and it does take time to develop, your way around the stage and being able to communicate on a podcast and to share stories. But once you can master that, the person on the stage will always get the business.
Yeah.
Will always get the checks. Will always get the girl. Will always get the promotion. Will always get the raise.
Yeah. It's funny you say that because I would intentionally accept opportunities to put myself in front of people because I felt a little nervous to be. It's interesting conversation. So I played in a band and did all that stuff. Did? Even though it was out of my comfort zone. Wow. Totally nervous. Totally.
What did you play?
Guitar and sing.
Oh, you sung. You were singing. You're a singer. You see, I had no confidence for that. By the way, no one wants to hear me sing. But
I wouldn't say I did either, but it was just like I wanted to do it.
No, I mean, I can see that. You do have you do look like some sort of like a rock star or something.
Thanks.
But it's just confidence. In the second you start, creating your own platform, like the podcast or getting on stage or presenting or getting in front of people, you start transforming into
for sure.
Because you're the go-to person.
Yeah, you become the brand. And that was the hardest thing. Like, when I started in the mortgage business way back when, it was like, I had to create a brand around me, because you don't want to be a commodity, right? Like that's the difference. Like you don't want to be just a mortgage agent or broker or a realtor. You want to be the guy, whoever it is. And obviously, that's what you've worked towards doing. And I think that anyone like, Gary Vee teaches the same concept. You build a brand around yourself, give away value, and then good things come.
Attraction. We don't look for investors. We attract them.
Absolutely. That's a great lesson. So, Alfonso, where do people find you?
If you can't find me, shame on me.
Yeah.
Because I'm on TikTok. I'm on TikTok doing this stuff here,
so you can dance then.
Yeah, I can dance. I'm Latino, but ultimately, And I'm on TikTok, Snapchat, Instagram, LinkedIn, Twitter, Facebook. Look me up, Alfonso Quadra, and if you can, at the very least, subscribe to my YouTube channel.
Sure.
Hit the bell to get notified the next time we're doing a video. Smash the like button. I'm just joking, but I'm out there. I'm there to share my experience. I'm there to give value. I'm always coming from a position of service. I want to make sure I can help as many people as possible.
Awesome. Well, I appreciate you sharing your strategy, the high level look at what you do, because it's something that I think is a big level up. It's something that people want to know about. How do I take it to the next level? And what you're doing is exactly that. So
Thank you, sir.
Anything you would want to share as a closing thought?
Listen, in the end, it's all about the person you're becoming, right?
Yeah.
So the people talk about goals, targets, and we have those. We have massive goals and we're taking massive action.
Yeah.
But it's not the goals. It's really about the journey and the person you're becoming on the way to getting those goals.
Yeah.
If you asked me 30 years ago if I could ever see myself here, I would say that would be virtually impossible.
Yeah.
And so what I always stress to my students and all the trainings and speaking when I'm speaking on stage is you are becoming something. Success is what you attract by the person you become. And you're transforming into thee. The more you transform into thee, and if you keep that in mind, you know, the podcast, the speaking opportunities, getting in front of people, you know, singing in a band, whatever it is that you want to do to get out there in front of people so you become a magnet, an attractor. And that is becoming. And so that's what I want to leave your audience with. It's like, listen, you know, I built a business from scratch. I was living on the streets and I was able to build a massive multi-million-dollar business portfolio across Canada and the US. If I can do it, anyone can do it.
Yeah, love that. Okay, well, that's a great note to end on. Thanks again for making the trip down. Thanks for tuning in to today's episode. Please make sure to share this episode far and wide. Help it help more people. I really appreciate you tuning in. I'll see you on the next one.